Hi, Tim Bigham for Traders Exclusive and Delta Derivatives, option hedges and edges, powered by RBTrader.com, the best option scanning tools on the market today. And looking at a market that is being powered higher, at least on the opening here, getting very close to that 204 level on the SPY, 2040 on the SPX. As far as overhead resistance, certainly some big consolidation in the chip space again. We're looking at KSU being acquired, also looking at SanDisk. So really seeing some mergers coming through here in the era of cheap money. I think that'll continue going forward, and that's really the trade-off. So almost throw valuations, I hate to say it, to the wayside, right? But we are, trading at the highest price to sales basically ever. We're looking at earnings probably going to be lower than last quarter, yet the market heads higher based on the free money. So even though valuations ultimately matter, for the time being, I think it's go with the flow. And we're going with the flow as well, over using some of those option scanners as well. We did see some big call action in KSU last week and over the past couple days on the November 55 calls. Obviously, those buyers being rewarded today as the stock is up sharply. And speaking about being rewarded, certainly Weight Watchers has been, the chatter over the past couple days with Miss Oprah Winfrey taking a 10% stake with 5% more in options. The stock went from 672, where she basically acquired the stock, traded over 19 again on the opening today. So you're looking at almost a 200% gain. I'm looking to actually take a guarded bearish position here, looking for a retracement back down. Don't forget, the market cap on this stock also went over $1 billion. The stock, basically market cap has gone up the same as Miss Oprah's stake. So I like the fact that I can position with some options to have a, again, guarded bearish position. The fact that the stock's hard to borrow throws put call parity out the window. So the puts are very expensive, trading at about 110 implied vol versus about a 60 for the calls. But I do like to play the downside, buying some January 16 puts, buying 5 of those, selling 4 only of the November 16 puts. I'm buying about 110 vol, which is, believe it or not, comparatively cheap, selling about a 130 vol here. Want to leave one put open to play for the big breakdown if it does happen. The stock actually on the chart did go up, filled that gap up around that $18 levels from the earnings disaster on early February. So I think the stock is way, way ahead of itself here. Certainly short covering, a big reason behind it, as well as the news on Oprah. This stock had about 15 days to cover, almost 30% short interest. So I think those shorts, looking at the price action on the opening the past 2 days, are pretty much out of there. So that short covering rally, I think, will certainly diminish here. And I think if it does break, we could see a real sharp reversal here. So probabilistically, I really like favoring the downside here, also the magnitude of the move. So that's what we look to do here at Delta Derivatives, structured trades that have a probabilistic edge with defined risk. So until next time, this is Tim Bigham, and as always, and especially in this market environment, keep those position sizes in place and those stops going. Here's a good trading. Take care.